And all right, what's up, everybody? Wall Street Jesus here, the Tuesday post game show. Interesting week ahead. Some action to talk about here and there. Last we left off, we've been complaining about flow for a long time now, but little by little, we're seeing some improvement. Should get better each and every day as this bear market wears itself out. And we'll talk a little bit about that. Looks like CRM reversing, heading higher here. Some interesting action into the bell. Those of you in the room and on private Twitter know exactly what I'm talking about. You had a sweeper come in and just annihilate one line on SPY, a pretty cheap line, but literally it was like 70 different trades, swept any little offer on each and every exchange he possibly can get. We'll look at that order. QQQs, the Qs also caught $1 million sweep. It was pretty late. This came in the last, what was it, guys? 10 minutes? 10 minutes before the bell. And also before that, a couple of us were actually hoping to see a little bit more, but Neil Diamond came in today and showed up. He's been MIA for a little bit. That's the DIA sweeper that you hear us mention from time to time. And he came in and did some shopping today. Basically, I think it was one sweep. So we were looking for more, but anytime he shows up, that's a plus. All right, so some ETF activity. We'll talk about some names. A lot of the names you guys like to play has been mostly squeeze related, lotto, cheap, weekly type action. And we'll spend a little bit of time on that, because a lot of us out there, a lot of you guys out there like to trade off that stuff. You have to have a different mindset, and you can't rely on each and every one of these cheap weekly plays to turn out and be some sort of home run. Okay, unless you manage your risk that way. If you say to yourself, I'm risking a small amount of money and I'm looking for that, big reward, that's a different story. Okay. If you manage your risk properly, you should be able to make some money out of the deal. But if you treat the lotto activity the same way you would treat, some quality order flow out there, and expect to have the same, hit rate, win ratio, and so forth, it's going to cost you money and you're not going to be happy. All right, so we'll talk about that as well. And we got a lot of members on here. Obviously, we're open to social media. We got a lot of Steam Room members. We'll share. I'll get some insight of how they played some of the action today, so you guys can get an idea. All right, let's just start off with just basically an overall market view here, okay? Because you're hearing a lot of stuff out there, and as this correction bear market, and that's part of the noise, as it comes to an end, you're going to hear more and more noise out there, okay? And let's just start on that note. Whether we're in a bear market or we're in some sort of correction and people trying to, nail down an exact definition, I think the most important thing to us as traders, and we have gone over this on the Saturday webinar each and every week, no matter how bad this market may get, no matter how bearish it may get, okay? And none of us, nobody on CNBC, there's a lot more intelligent people than you and I out there that have no clue how this thing is going to play out, okay? But what I do know from my experience over my career is there are going to be certain points throughout this bear market or correction where there's going to be some decent size squeeze opportunities. All right. So if you're looking, I think the best way to approach this, no matter how bearish or bullish you may be, you guys know And I'm not scared to admit it. I've been a perma bull my whole career. All right. But I'm not a stupid bull. At the same time, I'm a realist. I know what's going on out there. So for me, I'm going to wait and allow the setup to occur, the squeeze setup where I can find an entry on a couple longs, and make some money. And that would be my playbook. All right. That's me as a perma bull. You may be a perma bear and you may not admit it. And I know a lot of you out there are. Okay. You've been a lot of guys on Twitter out there been harping on me since the 2009 lows, how the world was coming to an end. And maybe some of you are still around. Okay. That's irrelevant. The bottom line is you have to approach it the same way. Okay. You just because you are all bared up, and even if you're 100% right that we're in a horrible bear market, you cannot just short each and every day you come out to play the game, or you will get annihilated. And a lot of shorts will be annihilated out of this correction bear market. Never fails. All right, but you're gonna approach it the same way. So in a general view, and again, I know this is something we touch on, but I think a lot of traders fail to realize that, yeah, instead of trying to rack your brain and trying to figure out what the hell's going on out there where you're spinning your wheels and you're not going to get anywhere, just understand, where the windows are for you to try to make some money. All right, so again, if you're looking to short, okay, and I know a lot of you guys are out there doing that. And this is swing trading, guys. All right, I'm not talking about clipping some intraday money on a flush lower. All right, I know a lot of bears talk a lot of shit and they can't hold a position overnight. All right, but I'm talking about if you are that convinced you're good enough to make money on the short side swinging, all right, you have to be careful and avoid shorting into the weakness, into the lows, no matter how spooky it may get, into bearish extreme sentiment. And you got to find it somewhere inside you to short off of these rallies. Okay, it's not the easiest thing to do, but if you think or are pretending to think you're going to find success on the short side in this type of market as a position trader, that's what you have to focus on. You have to sit, wait, allow the market to squeeze, allow things to set up, and then look for shorts after a rally. Okay, so us who are, leaning to the long side, it's the same way, just flipped. We cannot chase these highs, okay, when sentiment finally flips and just get long because we're leaning bullish. We got to look for the opposite. So we got to look for when this market looks spooky as hell. Okay, it looks like it's ready to roll over, break new lows. But we have sentiment at a bearish extreme because everybody is seeing the same things we are, and everybody's positioned for that. And we got to look towards me in particular, or whoever looks at sweeper activity. We're looking for some signs of sweepers that they're actually putting some money to work on the call side. Okay, and that's our window of opportunity. All right, so to be honest, here is where I kind of get a little uneasy. And the reason why is if yesterday, rather than that gap up, we would have traded lower, okay, I would have probably came out of yesterday a lot more long than I am today. All right, and why was that? Because Friday, the half a day right before the holiday, if you guys remember, there was a afternoon fade on light volume. It was pretty spooky, but it did a lot of good on the sentiment front. All right, put the calls were elevated. A lot of the stuff we look at on a day-to-day basis were all flashing green, meaning bears were getting a little too excited on the put side. Okay, so I was coming into early this week hoping for a little weakness similar to what we spoke about on the last webinar, if you guys remember. I got deja vu. I think we were set up the same way. All right. And I would have been looking out of the flow to see if call sweepers are putting some money to work, and I would have looked to get long something. Okay. So the opposite happened. Okay. We actually squeezed off that sentiment, gapped up. All right. And the momentum has continued. Now, it was a beautiful thing this morning. As a lot of you guys know who were in the room and on Twitter, we had weakness early on this morning. Okay. So that was a plus. If you look on intraday time frame, and the same way, guys, intraday, it's just on a different scale. I mean, it's, you're looking for fades intraday when you have sentiment behind you. All right. And you don't want to chase rallies, especially not in this type of market. So we had that early. Where are we here? How come it's not really showing it as much on ES? You could see it a little better. Let me pull up ES. I guess because it doesn't trade pre-market. Is that it? Yeah. Oh, there's a 5-minute. That's why. So you see, early on in the morning, we had markets were lower, prices were lower, and we had a decent pace of call sweeper activity come in and buy some of that weakness. All right. And that was something where it gave us the opportunity to look to get long something into red and anticipate a squeeze. Okay. But like I said, here's where it gets a little bit tougher now, because now in the afternoon, they were forcing us to chase green. Some of the shorter term sentiment that was in our corner is not there anymore. Okay. Why? Because things don't look as bad. And if you're saying to yourself, wow, sentiment shifts drastically, yeah, it does. I mean, don't your emotions shift drastically? I bet they do. Right? One fade and you're suicidal. One gap up and you think you're Jesse Livermore. Yeah, that's just the way we're built. All right. So even though the rally may not look much on a chart, this move from here to here alleviated a lot of that nervousness. Okay. So, I mean, my plan from here, unless the flow starts to tell me otherwise, meaning unless we see some real quality buying start to step into this market, what I'm going to do, the only way I'm going to benefit off a squeeze here in a big way, because I'm already long some stuff, but the only way I'm going to make a big dent is if we come down here and test again. All right, and hopefully sentiment will be on our side, same exact setup again, and call sweepers come in and buy some weakness. All right, if this market just squeezes, and it's very possible, this market could squeeze, right? We could go here up above 270, still be in a downtrend, bear market, correction, whatever label you want to put on it, and nothing has changed. All right, the only things that's going to be different at that point, a lot of the riffraff, a lot of the retail money is not going to be all lined up on the put side anymore. All right, so in this type of climate, you want that. It's important to have that to your advantage. All right, so basically that's where we are going into the close today. We got a lot of bulls in the air. Okay, you had CRM earnings, they're looking okay, right, as of now. We'll see conference calls and everything else. Oh yeah, CRM looking good. We got a lot of Fed speak coming up, right? You got Powell. I think is tomorrow Wednesday. I don't remember the days here. But you got Powell coming up talking at 4:00. Then you got the Fed minutes. So the Fed, in simple English, has been starting to sound a little more relaxed, a little more dovish. That's a bullish thing. Okay. Again, market was worried about them hiking rates into a slowing environment. And I haven't even mentioned yet, on top of all that, you got the Trumpinator, who's actually going to go sit down and have dinner with Mr. Xi, or whatever they call him. All right. Little dinner, maybe an espresso. Maybe he gets invited over for a late night cap and get a deal done. All right. So it's kind of like, we got a binary event here where it's really, really tough. You don't really want to be aggressive into something like that, unless you really have all the cards in your favor, meaning, the market price action was going one way, retail was positioned one way, and we start to see sweeper activity the other. That's kind of not the case here. So one or two things, I'm hoping for some weakness in coming days, and I think that will set up this all over again. And here's my take, okay? A lot of that intermediate term sentiment that we rarely looked at because there was no reason to look at it. It was such a strong trending bull market. A lot of those intermediate indicators, you guys remember we were discussing this, are at levels we only see at bottoms. Okay, even in 2008, the indicators that have been flashing green in my career, throughout my career, 2008 was one of the few that ended up rolling over to new lows, and there were vicious rallies off of them. Okay, so it's going to be hard for them from this point to really knock the crap out of this market and not find buyers, in my opinion. All right, that may change if we continue to squeeze higher. But from here, the way sentiment's set up, I want to keep a close eye on sweeper activity. I want to look to get long of things as they're selling them. Make sense? All right, so that's my game plan. As you guys know, members know, I share that with you guys each and every night. As we analyze the data coming in, sentiment-wise, sweeper-wise, we could talk about some flow here, so you guys get an idea of what we've been seeing. Oh, I got to pull up. Boy, hold on. All right, so here's some of the block activity. It's just nothing really good looking that's telling me they're positioning for anything more than just a squeeze. We see some big ETF action from time to time. Sometimes a name or two, but nothing. You can see there's calls and puts on here. Even though today the flow leaned bullish for the most part, it's been action's been very sloppy, very mixed. And why don't I just tell you this? All right, I'll tell you my opinion what activity caught my eye today. First off, PCG, one of the few names that has really seen nice action. If you guys remember into this drop right here, there was some really aggressive sweeper activity, Jan calls, March calls. A lot of us took a shot on those calls into that weakness. We got lucky the following day, huge gap up. It was gapped up about $8. We had intentions of holding it, but they gave us $8 the next day. So the majority of us took at least big chunks off the table. All right. And then we had some consolidation here, as you could see, right? Some sideways action, got pretty quiet. We really didn't see any sweeper activity of note. Then all of a sudden, in the last couple of days, they started to get really aggressive again. Yesterday, as you know, we were talking about it. Some really nice action into yesterday's session. And then this morning, right at the open, I can show you because it was pretty impressive. Watch this. Right at the open, as the market was selling, these guys found a little dip. This thing gapped up about 40 cents, 50 cents at the open this morning. Okay, PCG. And then you can see here, look, see this? Fade with the market here. And they came in just sweeping up this weakness. See, those are the signs you want to see from real buyers. Those are the signs you're supposed to see. We're not really seeing that. We're not seeing that. PCG is not a play on the market. PCG is what I like to call, a story stock, right? There's a story there. There's noise around it. They're not relying on the market to make money in PCG. So you had this fade here. They came in, attacked it, tacked on more action as she was creeping higher, and then was just solid throughout the whole day. Market fades, stocks testing lows. This thing just held up and held strong throughout the whole day. All right. So that, in my opinion, was day 2 of action, but was the most aggressive activity out there today. Then we had Microsoft. And you're probably saying, well, Jesus, Microsoft, what's wrong with that? I'll tell you what was the issue with it. There was nothing wrong with the action. The action was aggressive. All right, we were seeing sweeper, sweeper, sweeper. The problem is what they were playing. They're playing out of the money weeklies that they started sweeping at. What was it, guys? 15 cents? What price did they start sweeping those weeklies? The one line, 17 cents. And there were other lines too, which were half decent. But those of you who have been around me a while know what type of action Microsoft catches when they want it. They hit it hard and they keep hitting it. So, it is what it is. Somebody is getting aggressive in some out of the money lotto type weeklies looking for a squeeze. That's my interpretation of it, right? It's not making a bet on Microsoft out of this correction. He wouldn't be hitting those. So, again, I don't know how much these moved. I saw they were paying up as it went on. I didn't play them. I should have played them. They were so cheap. I ended up playing the stock rather than the calls. I day traded the stock. PCG I did play. But now, I should have taken a shot, a small, cheap amount like that. It was worth a shot. But, now here's the thing. What are you looking for out of this? Right? This is what I was hitting on early on. What are you looking for out of this? Right? If you paid 18 cents and these things are worth, I don't know, 25, 30 cents, right? If they're worth 30 cents in a day or the next day, is that something you're looking to take? Right? I mean, percentage wise, it's a home run. Or are you looking for, 18 cents to 70 cents a buck? Is this market the market, to do that in? Maybe the answer to that is yes on your behalf. Maybe those are the shots you want to take because one real nice winner will make up for some losers. But again, these are the stuff you have to have mapped out. You have to have an idea of what your game plan is. What your game plan is. Because I tell you what happens a lot of times with this. What happens is these things will go from 17 cents to 30 cents, then go back down to 15 cents, and then end up at 60 cents. And how traders approach it, they don't take the quick run up, okay, because they want more. Then it goes back down to 15 cents. They sell them. And then it goes to 70 cents where they were looking for initially, and they decide, and they don't have anything to cash in. And so that's what's going to happen a lot of times when you don't have a plan. If you're looking for more, you're looking to risk, right? That small amount of profit that wasn't enough for you because you're looking for more. You don't want to get yo-yoed around with this type of activity. All right, and they're cheap for a reason, right? They're cheap. We know already Sharpies, they're not playing 17-cent weeklies with confidence. They're rolling the dice. And a lot of times we see them click, but they go down. We see them go down. So you just got to understand, and maybe you want to day trade them. Maybe you want to day trade them. Maybe you get lucky, you get a bigger move intraday. Sometimes you don't get as big of a move and you're taking a scratch or a small profit off the table. Maybe that's your approach. I can tell you on the equity side, that's my approach. My approach is I'm going to get into some equity, playing off the momentum. For the most part, I'm going to take small profits off the table. I'm stopping myself out. So I'm going to have some small losses. And once in a while, I get lucky. Not because of me, but I get lucky. Sometimes the stock just continues going higher. Sometimes they keep sweeping the living daylights out of it, and there's no pullback, and I can't even sell it as much as I want to. Where you raise a stop and stuff like that. Those things come on their own. The moral of the story is exactly, Tim. You don't want to be a pig unless that's your plan. And if your plan is to be a pig, you got to understand you better be able to absorb more losers. All right. So Microsoft, that was part of the aggressive activity this morning. What they close at these things? Anybody have any idea what they closed at? Because what were they, the 110s or something way out of the money from there? Anybody know what these things closed at all? Did they close at the highs of the day where they were? I think they were 20 something cents at one point. The other action today that was similar, 34 cents. Wow. I didn't even know that. Jesus. AMD, 39 cents was the high. Jesus. They moved a little better than I thought. I didn't realize they moved like that. The other one was AMD today. And I didn't play the stock or the options here. I really don't know why. I don't know why. But AMD, very similar to Microsoft, saw some aggressive sweeper activity throughout the whole day, really. Microsoft was primarily early morning. AMD was just spread out through the whole entire day, most of the morning, most of the early afternoon, the majority of stuff in weeklies. But we actually saw a little better action as far as quality in AMD yesterday. We saw some put selling activity. And, that's another thing before I forget, that I'm holding my hat on, hoping, I'm trying to find golden nuggets, some good news out of the flow. Maybe I use as a building process here, but we're starting to see some put selling out there. We're starting to see some put selling. Now, you really want to see some size put selling. You want to see that aggressiveness, not just in weeklies that expire in a couple days, because again, that's just putting in short-term lows and similar to weeklies. But we are starting to see put selling finally. We weren't seeing too much of that. All right, so AMD had a somewhat aggressive put seller and caught some sweeper activity again throughout the day. Had a nice day. Looks like closed a little bit off the highs. Was pretty strong all day, though. Yeah, you can see here. Look at that. Powerful all day. All right. That was today, in my opinion, those three, that was the most aggressive activity in individual names. So you had the PCG again, you had Microsoft weeklies, AMD weeklies. All right. Now, there was some other bull flow out there. Okay. There were some other half decent looking bets out there. For me, I want to see them come back. Like you see what I said with the PCG? That's when I know there's no doubt in my mind that somebody or some group out there is bullish and making a play on a move higher. You understand? He's convinced me, he or she, or whatever it is. Okay? One bet in this type of climate, you see one call buyer step into a name, no matter how big it may be, no matter how much you like the name, it could mean anything, right? We know that people are shorting out there. right? And finding success. We know the smart money, when they're shorting, they're going to hedge their short positions. How do you think they do that? They do that by buying calls. All right, so that's the problem. Like when you see one call buyer in a name, especially if it's in like weeklies or something like that, it's really difficult to trust. Now, turn the clock back to the last 6 straight years of a bullish market, a bullish trend, and you can get away with playing that stuff, right? The momentum is on your side. Even if you're wrong and that wasn't a clean call buyer, you have a higher probability of getting away with it back then, right? They're buying the whole sector. They're buying other names in the group. There's been flow in that name a couple days ago. You can get lucky and get away with it. Now, it's a different story. All right, so that's why I'm trying to be pretty picky, because that's my gauge of if there's real buying coming out there. So like the way they came after the PCG or the way they came after the Microsoft weeklies, I want to see it in other crap. You know what I mean? In other meaningful lines, meaningful names. And I know when this thing finally does come to an end, I'm going to see it. So that's what I'm kind of waiting on and excited for. Also, we had some other names. That's what I was getting to. Blue. You guys got to help me out here. Any data due in this blue? Honestly, if there is, this guy's got a bigger pair of coconuts than we thought he did. I know a lot of you guys follow this name. Blue Biotech. Anyway, you had a nice put seller in that name today. Let me dig it up for you. Hold on. Blue. Nobody knows blue. Anything coming up? Blue. Yep, this is it. So this is the blue put seller. He sold December 110s. I mean, that's a pretty ballsy play. Anybody looking at this blue? Nobody's even remotely interested in this blue? All you biotech guys out there? I think my questions are frozen here. You're my boy, Blue. You're in Labu Swing. Now, I don't know, Joe. This bet catches my eye. When you see a put seller that looks like this is pretty, you know what I mean? Pretty sharp bet. Oh, you guys are posting in the chat room? Jesus Christ. My bad. I'm looking on the questions over here on the webinar thing. That's all right. You guys keep posting wherever you need to. I'll glance at both. Yeah, I'm not even talking about biotech. I know there's some things coming up in biotech in general. This order, if it's a clean put seller like it appeared to be to me, this is a pretty sharp order. I'm not going to lie to you. So that's why I'm asking. I don't know, if they have anything cooking or, any data coming, but that would make it even, excuse my French, but more ballsy if there is. So this is what the stock looks like. Havana, you know this blue. I know you play these biotechs. Yeah. Dig, K-Trade is saying enrollment of Karma study completed FDA action data anticipated in 2020. Huh. I don't know. So see what you guys can dig up. Um, not that it matters. Like I said, even if if there's something, if there's data due and this guy's selling puts into, he's pretty confident. Let me just make sure. I know there wasn't, when I saw it, there was no stock involved. Let me just double check 1 second, just to make sure. When you see these things, sometimes they're too good to be true. But this, I'm pretty confident that this was a clean put seller. And this thing can move. I think Bullstruck used to play this thing. It caught some call activity and had a big move at one point. Yeah, there was no stock involved. There was no stock involved. And you could see here the market makers pooped themselves off that. You could see this thing moved right off. See it? Right there. Put seller, bing, 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 bing. Yeah, Havana, keep your eyes on it. I know you play these things from time to time. I remember that one biotech, like the blue you had, that got bought out, you made a score on. And SRPT, but one before that. Might be worth a shot. I don't know. I mean, what would you play call side on this? I mean, this is short dated, right? Go with some December calls or something. You got to watch these put sellers. Juno, that's it. Havana, Juno. See, I got a good memory. I remember that. So Juno and SRPT. That's right. Um, yeah, you got to keep an eye on these put sellers. You have to keep an eye on these put sellers that look like this. Yeah, this is not a guy just saying, "Oh, I don't think it's going to go down that low." These biotech put sellers, they're sneaky guys. You got to watch these guys. They're sneaky guys. And the chart looked like what? What do we say? We've seen worse, right? Celgene board. Yeah. I remember. All right. So yeah, that's was another bullish bet. Again, not sweeper activity, but a bullish bet you guys can look at. Here was an interesting name, Race. This thing has been clobbered, and I mean clobbered. Eesh, look at this. This is Ferrari. All right, so this thing got destroyed, and it caught a February. It caught a February sweep, and then a big block came in. Now, here's what rubs me the wrong way sometimes with this. That sweeper could have been front running that block. We see a lot of that. Okay, in other words, somebody, sweeper gets wind of a $2 million block coming in, he front runs the block. So you see the sweeper first, and then the block comes in a couple minutes after that. I like it kind of the opposite. If I see a block, I like to see the sweepers confirm that block. Okay. So, I mean, me personally, I didn't buy it, but I have it on my screen. And if I see any sweeper activity, additional sweeper activity, I will consider it. Okay. I will consider it. I know this name was a big mover. I know a lot of you guys used to trade this name. Yeah. I mean, correction. I mean, look at the run in this thing, right? Well, it seems like it came public just yesterday, but look at this run. So this is normal, just like everything else that's correcting right now. This is just normal process of the market here. Digesting that big ramp. So the reason I like it, even just a squeeze, you get a decent move. We'll see. I'm going to wait and let them hit it again. So we had that. And honestly, there wasn't much more than that I found too interesting on the action front. Let's look at that SPY guy. Okay, and you guys know I'm not a big ETF guy. Okay, But this SPY, I love when I see this type of stuff. I'm fascinated by it. This is what the SPY guy did. All right, he swept up 22,000 of these December 7th calls when he was all said and done. Right? Cheap, but it's just the way he fired off this order. This thing was, you guys in the room heard me on audio video oohing and ahhing. You're probably saying, what the hell's going on over there? It literally took up my whole screen for a good 3 minutes, that sweep. All right. It was broken into so many different orders. And that just tells me of how aggressive he was. All right. How there was a type of urgency there, because he literally took out every single offer across every single exchange possible. That's what he did. This order was 80 trades deep. Can you imagine that? 80. Now, I've seen others 200, believe it or not, trades deep. But somebody was telling me 100 when it was all said and done. This was. But that's how crazy this thing was. So you could see some of the breakup of it here. And this is not over the course of the afternoon. This is over the course of milliseconds. Milliseconds. This all came in at the same time. So you could get what I was seeing on my screen, all this activity coming in smaller orders, all taking out the 27 cents. Now, again, ETF, what is he playing for? Probably a lot of the other same like the other action we're seeing. He's playing for a squeeze. He's playing for a squeeze. It can very easily be, guys, in this type of climate, could be somebody who's short and is kind of concerned about a squeeze here. Because that also, you will see that urgency. He needs to get protection on. He needs to get it on quickly. Now, a lot of these sweeps you are seeing are shorts that are protecting their position. But you got to understand, it's got the same impact over the short term if you're looking at this stuff the right way. In other words, if I got a guy, or again, no offense to the women out there, but guy or gal who is bullish and wants to play for a squeeze, he can aggressively sweep SPY calls, right? Plain and simple. Now, you have somebody who's short and is really concerned about a squeeze, who's going to sweep aggressively SPY calls to protect his short position. Why is he doing it? He's really concerned about a squeeze. You understand? So it's going to create the same momentum as it would for the guy who's playing for a squeeze. As long as you treat it the same way, as long as you have the expectation that it's just a squeeze and this guy is not calling bottom, right? That's what I'm getting at. This guy's not coming out screaming bottom. This is a bullish player or a bear really concerned about a squeeze and aggressively sweeping some short dated calls. All right, so that's the order there, 27 cents. Literally came in 10 minutes before the bell. And then the Qs, where's that Q bet? The Q bet was actually bigger in size. Here it is. But you guys are probably wondering why I was more excited about the SPY bet, is because the way it was fired and so many broken up orders. But this one was actually even bigger. Say 349. They basically came in holding hands. These orders came in holding hands, probably the same group, same syndicate, playing for a squeeze. All right, so that's the action. Let's get to a couple of questions. Anything from trading, strategy, flow, Anything that may be on your mind, throw it at me. And yeah, guys, anybody who's new in the room, yeah, these are the places to ask the questions. Don't be embarrassed to ask questions. If you're unsure of anything at all, there's no reason to try to guess. Try to get information and we'll quicken up the process here. Let's see here. What am I thinking for GM? You mean General Motors? I mean, GM, I really don't have any thoughts. I really don't have any thoughts. I haven't seen any notable activity there. GM always sees some sort of flow, but I haven't seen anything really that's knocked me out the chair. So I don't have too many thoughts. I don't have too many thoughts. It looks like she's already been in bounce mode. That's another good sign we're seeing is we're starting to see some better price action outside of like tech and retail. All right, because again, that rolling bear market tornado that we continuously have been talking about since the summer, tech and retail were the last to get lit up. Okay, so we should start to see, and we are seeing some of the other stuff bottom first. Okay, and GM is probably a good example of that. I mean, look, tops out in July, and she's been an absolute menagerie since. We've seen it in some of the casinos, right? Wynn finally got its act together. Right, finally put a couple days of a rally together and freaking Wynn. LVS saw a little more flow today into some early weakness. So this is the stuff we want to see. Because here's the thing, guys. Even if we're in that bear market, okay, a lot of times the money will find places that outperform. And the beauty of it is you won't need the overall indices to make money. Okay. And I give you the example in like 2000, the NASDAQ bubble, there was huge rotation after the initial pull where everything got hit. Okay. As the market was still, as tech was still in a downtrend, money was massively rotating into small caps. Okay. That had nothing to do with that tech bubble. And we started to see different groups, different names act a lot better, act different. And those are the signs you want to look for, even if we're in a horrible bear market. All right. And that's going to be the difference. A correction, you basically, once you hit bottom, like November, and this is what it kind of resembles to me a little bit. We went over that 2015, 2016. Again, not the time, the price action. All right. So a correction, you have that correction, you test lows, you find buyers, and then little by little, you start grinding, creeping higher, a whole new bullish trend. And the old leaders, okay, not necessarily the old leaders, but tech can be a leader coming out. All right. But sometimes when you get into these deep corrections, bear markets, there's new leadership that emerges. And that's something to get excited about. I'm being honest with you guys. I'm not trying to sound corny. All right. That's where names like, the Squares, the PayPals of the world, in different groups, that's where they start. All right. A lot of times late to the party, you realize these companies after they already exploded, because we've been in a bull market for so long. That's what eventually should come out of this pullback period, whatever it may be. So that's what I'm most excited about. Let's see what other questions we got name-wise. Qualcomm. Again, we've been seeing some flow that mostly bounce type flow, but nothing really significant. I haven't really noticed anything significant. AMAT actually I've noticed a bit more flow than others in. Again, semiconductor. Uh, I can't even look at this thing. This thing's been destroyed. All right. Like we're talking, like you hear a lot of people talk about this bear market or this correction started in October. This bear market in semiconductors started long before that, right? Before even the summer, the springtime. This is March. Look at this. So again, this is something to keep an eye on. As gloomy as it looks, as bearish as it may be right now. Okay, I'm not saying chase green. What I'm saying is the market has a liquidation day. Okay, and AMAT is down a little, but showing some relative strength, outperforming. And then we see some call sweeper activity come into that weakness. That's a positive sign. That's a positive sign. Yeah, you need to see it develop. Take some time, but that's a positive sign. Yeah, and I wouldn't Reddy, you're talking about some put action in some of the other semis. I wouldn't wrap myself up in the put activity in some of these things. Okay. And what I mean by that, we don't need the put action to tell us that AMAT's bearish. Okay. I'm sure there are going to be, even if you're bullish, if you're buying equity, you're out of your mind if you're buying a size position and not protecting that. Okay. I would just pay attention to the sweeper activity more than anything else. And not just one of the sweeper activity. So kind of like, again, it's easy to say now because she's started to move, but you see like LVS, how it wasn't just one order. You sat back, you watch them hit it again. They come back, they hit it again. They went out a little further March. So you want to be able to sit back and allow that to happen, and also be able to buy weakness instead of chasing rallies. Okay, because again, a lot of times these things don't go up in a straight line. They bang their heads down here to find a bottom. They test, right? Sellers continue to test to see if buyers show up. So it gets like choppy before you know it. You look and this thing is up, north of 60. The same thing with like a win. So we don't want to jump the gun, and we don't want to go and chase green and buy win at 120 because this thing could still be in a downtrend, right? This thing could still be in a downtrend, and these blood buyers were just playing a little turnip here. So we want to stick to buying when they sell these things. A lot of you guys in the room, I give you credit because I didn't even play. You played that LVS perfectly. That LVS, a couple of you guys, I saw call them out, played it perfectly. You didn't chase. You saw some flow. And then when they flushed it, you saw a little more action and you jumped in. And that's the hardest point. So you got to trade out of it. And if you want to give it a little leash, you can give it a little leash. That's what you want to try to stick to in these names. What are the names? SGMS, I haven't seen any more action. The majority of action has been in leaps, 2020 and 2021 leaps. This has got to be a credit situation. Yeah, they're a highly levered company, the whole space. And, that's another thing we got to worry about, right? That's another concern, credit in this market. We're starting to hear that C word. We're starting to hear the reasons why this market has been a shit show for so long. And, that's why. But this is stocks, when you do this, they're worried about a lot more than what you and I see. So we'll see, how long this plays out. I wouldn't, unless you're playing for a quick squeeze, you got to hide in leaps and close your eyes. Yes, solars. Interesting you mentioned that. I saw, what I see today? CSIQ? Wait a second. Canadian Solar, something like that. Yeah, that's it. This one. You like this one, Evo? That's the only one I saw today. Let me think. Oh, is this a solar? Run? I saw that too. Is Run a solar? No, nothing in Sedge, Evo. I saw CSIQ and some unusual sweeper activity. This doesn't look bad, by the way. What is this? Run. I looked at it earlier today. Jinko, yeah, that's a small one, right, Gordon? Jinko Solar caught a little action. What is this? Run. Anybody know? I can probably look on it here. Hold on. Yeah, this is solar, guys. It says renewable energy. Interesting. So yeah, there was unusual activity in this thing today, sweeper activity, and she closed strong. And look at this. You know, you got some nice consolidation, right? Off a big move. Is this an IPO? Yeah, it was an IPO about a year or so. And you know, sweeper activity, they're not that common in this name. It's a fairly new company. That's why I remembered it and it caught my eye. Something to keep an eye on if you like these solars. But yeah, even I answer your question, Run and Run reported. Yeah, they reported right here, Gordon. Wow, 17 cents. They earned 17 cents. Oh, no, 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 no. They lost money. They were supposed to earn 17 cents. So they missed the number. Looks like it sold off a little. But you can see volume came into it today and some sweeper activity. Today was December's. Hold on. One of my buddies, it's funny because he mentioned to me to let him know if I seen action in this name. I think it was yesterday, just yesterday. And then we saw action in it. Let me see here. Yeah, here's what they played. December 15th. So keep an eye on it if you're interested. Again, don't chase. Try not to chase. Let them come to you. Let them come to you. You miss it, you miss it. You know, now with today's gain, what was this thing up? A buck? Over a buck. Jesus, 8%. Yeah. Now you got a 3-day rally here. I would let it chill out. I would let it chill out a bit. But yeah, interesting. Yes, VZ has been on fire. On fire. See, these are the names that a lot of the rotation money has been going into. Recession proof. You know, hopefully they start to spill into other stuff. But this Verizon's been a beast. What are the names? Pfizer, some action today. Pfizer looks a little better than the others because you had a little breather here. See? Rip. And nice breather. You know, Pfizer, I ignored the action this whole trip, and I didn't even realize she run. Pfizer was a name I always ignore. I hate trading this thing because it's been dead wood for ages. And then lo and behold, you know, these things are starting to heat up again. I think they are, Gordon. I think they are. I think they are. Verizon's been the better of the two, though. Not even close. Verizon's better than AT&T. You know, apples and oranges. Speaking of telcos, a little more action than this guy today. I caught yesterday. What was it? A March bull combo. player sold puts to buy a call spread in this eye. And she followed through today, and a little bit of flow there today, smaller flow. This looks, this has been a decent buy. I won't say dip because people think a dip is like a down day. Buy the pullback type name. You had this enormous run. Enormous. This is a 5G play, I'm told. So you had a little more action there. What else is some of these recession-proof type names? I know, Gordon, you sold a couple of them. I don't know if you're looking to buy them back. Maybe you get a little further squeeze in the market, you'll be able to buy them back. J&J, right? That's been a name. Oh my God, I didn't even know that reversed today. Wow. I saw this J&J down early afternoon, and it reversed. But this has been a name. Look, total different look, right? Uptrend. I mean, you remember these things, guys? Nobody wanted to touch these things. And that's where the money's been going now. Nobody wanted to touch these things. So if you are still bearish and we see a squeeze in the overall market, in all the riffraff, Netflix, Facebook, all that stuff, the likelihood is that these things will probably at least consolidate, you would think, if not pull back. And that's where you got to start looking at these things if you want to be involved in this group. You don't want to chase them when they're hot, because this is what happens, right? You buy the highs when you start to notice them, and then you get caught in this, and you're behind the 8 ball already. Yeah, well, they have a little bit, Gordon. So I think you made the right move. They have a little bit. They've been rotating out of some of these things. The market hasn't really squeezed much yet. If it squeezes further, I think you'll probably see even more rotation. But yeah, these names, they've been hot. The Coke had a little bit of a pullback. I mean, look at that rip. Jesus. McDonald's. Another strong name, Mickey D's. I'm putting my 2007 recession cap on. I'm trying to think of recession-proof names that they usually go into. Oh, this is an interesting name. You guys should keep an eye on off earnings. Dollar Tree. You got earnings coming up in this thing. There's been some flow. You got a lot of big boys in this name. Carl Icahn being one of them. If they sell this thing off earnings, which is a possibility, look what they did off earnings the last time. Got destroyed. If there's weakness off earnings, you got to keep an eye on flow in this thing. You got to keep an eye on sweeper activity, because my gut is telling me they're going to come in buying it, because there's some big shots in there already. So keep an eye on that. That's November 29th, DLTR. And the other play in the group is DG. They got earnings, I think, in December. They've been doing a lot better than the DLTR. Well, for Niner there too. These names are considered recession-proof. Yeah, that's the logic, Gordon. That's when these things thrive. I'm trying to put my recession hat on and try to remember some of these names. Netflix Googled to be over the 200-day right of the bear market, and they will fire weird to see. I just see trading. I don't know, when did you start trading? Honestly, like, when did you start really paying attention to the market? See, what this is normal to me, seeing this type of correction. You know, when you have 2 years, C Train, that's why. When you have moves like this, they don't keep going. And the further they go, the harder the fall. You understand? Everything corrects. There's corrections. They're normal. A lot of times, what the norm is that every time you get a decent move, you will get a smaller correction. Okay, it'll feel painful, but there's a correction, finds the bottom, washes out, shakes out everybody or the riffraff, and then goes to new highs. I think because all these names have been so crowded for so long that this is nothing. This is nothing. I told you in 1998, not to sound like an old man, in 1998, tech stocks were as hot as they are now. Okay. Semiconductors, especially. Everybody wanted to own the chip stocks. Okay. You had the cell phones, the chip stocks were going through a boom because of it. Just technology in general. It was all about chips. Make a long story short, in 1998, you had everybody long chip stocks and they would go up every single day. And it just doesn't last. So what happens is, in I think it was October of 1998, there was a vicious correction. At that time, it was blamed on Japan. Japan was going into this deep recession and they were taking us with them. Okay. The tech stocks, I remember the semiconductor stocks. Okay. And I'm talking about leaders now. I'm talking about the big leaders. I'm not talking about small bulletin board crap. I'm talking about leaders. We're all 40-50% off their highs. 40 to 50% off their highs, all of them. Okay? And then you know what happened? 1999. They went on to new highs and raged after that. Think about that. Okay? So, but that's what happens. You get these, like if this is a correction, they will eventually flush out every possible bull, find the bottom when nobody even wants to touch these things, and end up at new highs again. All right. If it's something more than a correction, you're just going to see a longer consolidation. But we see it all the time. Remember how hot US steel was? Right? Remember how, like, look at this run here. And now look at it. So it's totally normal. It's totally normal. Like, look at the name, like Nvidia. These runs were out of control. Look at this. They were heavily crowded trades, heavily. So, listen, how much lower do they go? Who knows? But eventually what will happen is the sellers will dry up, and at worst case, they'll be stuck in some consolidation where you can trade rallies and buy dips and do all that fun stuff. But everybody who put a sell ticket in for the last 2 years looked like a moron. I felt like a moron, right? Think about how quick of a trigger I have on the sell button. Anytime I sold something, you look like a jackass over the last 2 years. And those times change. They have to change. So trust me, this is not abnormal. It's totally normal in these things. Totally normal in these things. You got to be smart about it. We got to be smart about it. You got to let it play out. You got to take what the market's giving you at the time and stick around for the turn. That's the most important thing. Stick around for the turn. Yeah, and C-Train, listen, I'm not don't get the wrong impression. I'm not knocking you 2 years being in the game. I'm saying it's a good thing. It's a good thing when you see this happen early on. Okay. It's not a good thing if you're getting lumped up, right? And you're losing all your money. But if you're just starting out in this game, I think if you ask me what's the best time to come in as a trader, it's not in 2017. The best time to come in as a trader was in 2008 and watch the whole market fall apart. And then 2009, when everybody was scared shitless and broke, you were there to start building. And I think that's what a lot of traders, you know, that's why you could sense the fear in them, the nervousness in them, and just the inexperience, because they just started playing a couple of years ago. All they know is an uptrend. That's all they know. And they don't know how the market really works. But my advice to you is, if you just start to keep your eyes open, don't try to be a hero, be smart, play nice and easy, play small, take what the market's giving you, but at least have your eyeballs on the price action every day and be around when this shit turns, because when it turns, that's where you make the money. And the point I was trying to make before I veered off is, if you started trading in 2009, this wouldn't be bothering you right now. You understand what I'm saying? If you started trading in 2009 and 2009 to 2018, you had a really nice run, made a good amount of money, you're not fazed by this. Even if you got caught in this initially, you're not fazed by it. The ones who get fazed by it are the ones who are trying to make this out to be 2017 again, when it's not. When it's not. But that's where all the money's made, C-Train. That's what I'm saying. There's no reason to get discouraged. People get discouraged. A lot of new traders get discouraged in these times, right? What do? They flip sides. They try shorting because they can't make any money long. Just pull up a SPY chart and scroll back, my friends. Look at these pulls. Look at each and every pull, and then look what followed. Some bigger than others, right? 2008 back here, debacle. 2009 to 2012, more than made up for it. More than made up for it. I mean, 2013, look at 2013 over here. Look at this. And if you were bearish and you got wrapped up into that whole 2008 narrative, what do you think the bears were saying? Oh, this is like 1929. The market's going to roll over and break the 2008 lows. Watch. Oh, they're just reeling in more bulls. It's Armageddon. Credit. QE doesn't work the whole way up. And, now they're feeling a little excited again here. They finally got a half-decent pull, so they can run their mouths a little. Eventually, this will come to an end, and they'll get squashed. Stick around, my friends. Stick around. It's the best advice I could give you. What else? Whose questions did I miss here? Don't take it personal. Throw them out there again. I skip over you. Anybody else have anything to add before? Oop, I just found the question, and I am so bad at navigating these questions, boy. It doesn't get much worse than me, I'll tell you that much. Hold on. Netflix, Google, we spoke about. Yeah, so here's my take on the tech stuff, by the way. I think they could be traded. Okay? But for me personally, I'm not looking at that space for any more than a quick trade right now. Maybe I shouldn't feel that way, but they still scare me. Why? Because I told you that bear market tornado got to them last. Okay? And we know just try to remember every other sector that bear market tornado got to. Remember how relentless those sellers were? Relentless. And you got to believe that in tech, they're still going to linger there. They're still going to linger. All right, so you want to try, just like, we're beating a dead horse here, but you see some flow into some weakness and lows, and you get a squeeze, a tradable squeeze, get the hell out. Leave a runner if you really think a bigger move, a larger move is coming. Was that sorry so long, but I in 2016 was playing pennies, small caps, on left and right. Vic started options, SVXY. Yeah, and C-Train, I read a paragraph of what you just mentioned, and I can tell you already a problem you're going to run in. You don't flip around. That's what traders have a tendency to do, like I just explained to you. Something stops working, the long side doesn't work, they start shorting. They get run over on the short side, they start playing VXX products. They can't make money doing that, they start selling premium. Again, I've been in this game 20 plus years. I can tell you the majority of players that I know, the majority, okay, there are exceptions. There are traders that do certain things extremely well, and they're a rarity. I'm telling you, the majority of players that I know that have stuck around in this game, been able to stick around in this game long enough to find consistency, is trying to master the long side and waiting, allowing for things to set up, waiting for the setup. You understand? And sometimes it's easier said than done. You need money. You can't be patient. You're forcing trades. You get discouraged. You ran into two losers. Now you got to flip sides. But if you come into this game thinking you can do everything and you can do it all well, you're going to get lumped up. I mean, look at Bitcoin, right? Look at Bitcoin. You had stock guys thinking, all right, you know what? I can't make much money in stocks, but I can apply my stock skills to Bitcoin and make money. I can trade anything. I'm Jesse Livermore. And what are they doing right now? What are they doing? They believe anything that people tell them, and they get destroyed. They get destroyed. So that's why you got to try to find one thing, stick to it, work on it each and every day. Yeah, no, Cole, without a doubt, and that's what we try to do, right? Every day is a different day in this game. That's the beauty of it. You can learn something new. You get better at what you do each and every day. Learn to correct mistakes. Build a family around you, and that's it. That's what it's all about. And try to have fun along the way. Anybody else have anything to say before we wrap it up? So me personally, I'm gonna try to, if we squeeze from here, I'm gonna day trade off weakness or fades. I got a couple things I'm long already, blah blah blah. For me to make a dent, I need weakness. I need some weakness here. And every time we get some weakness where sentiment lines up and we see some sweeper activity, I'm going to look to add to some longs. And then eventually, if I catch that squeeze, that big sentiment squeeze, I can make some money and then wait for the setup again. Make sense? But, the further we squeeze, again, that's what you got to remember. The further we squeeze here, the more risk you take on. So be careful on that front. You got to be quicker and quicker as we stretch. Pullbacks. We want to look for pullbacks. All right, we all good? Anybody out there? Just throw this out there quickly because I forget each and every time. If it's your first time on here and this all sounded like Yiddish, you could go to wallstreetjesus.com. You click on the strategy tab and quick and easy to read blogs here, giving you a basic idea of what we look at, what we're looking for every day. All right. If you have an interest in joining the premium package, here's a 3-day trial, free, no credit card. You get access to everything. And then it's 50% off the first month. If you're just interested in private Twitter, go to the product session, private Twitter, and on the bottom here, you'll see for $59.99, you put in your Twitter handle and you get the Twitter feed. Quick thought, CRM gonna probably be positive. Yeah, initially, yeah. Will it bring some sellers? Zitch, we got some action. I think here's what I think, Zitch. Honestly, I think we could probably see some juice off the open tomorrow. Some momentum. I probably will see some sweeper activity early on, and I think we'll see a little further squeeze going into Powell, and then God only knows. You know what I mean? Then God only knows. All right, because then you got and listen, the Fed is sounding a lot more dovish, and that's a good thing. Okay. But I also think that's part of the reason why we're getting a little squeeze here. We're getting a little lift. Shorts are getting a little antsy, and they're doing some covering into Powell. So we'll see how that plays out. And then you got the Trump thing after that. You got the Trump thing after that. So tomorrow, I think we'll have a little more room, a little more juice, and the CRM is definitely going to help. Let's see what we're looking at here. Oh, yeah. So what is that, 136? Damn. What was the expected move on this thing, Zitch? 10%? So where's that, basically? Right back here, then? Yeah. Yeah, we'll see. It'd be interesting to see if it brings in sellers or not. The animal CRM. All right, but we'll see what happens. Hopefully, we have a little juice to maneuver in the morning. Oh, they came out? Did NTNX come out yet? Oh, yeah. So you got some help there too, huh? Yep. So we'll see. Honestly, it'd be a good thing if we get a little further squeeze early on tomorrow, maybe take off some risk. You could do some rolling and stuff like that into, the Fed and the Fed minutes the following day, and then we'll see how they lay them out. We'll see how they lay them out. I don't think I'm going to get my wish of selling prior to all this. I think it's likely, the likelihood is we're going to get a rally, and then we'll see how it plays out after that. I was hoping we kind of bang our heads over here a little bit, and each time they try to flush them, sweepers were buying, I could play some stuff. Because I sold. A lot of what I had, I sold. I sold the Facebook. I sold all the other ones. So I was hoping to reload. Yeah, we'll see what happens. We'll see what happens. All right, boys and girls, always a pleasure. Get some rest. All right, and we'll see how they lay them out tomorrow. Thanks, Gordon. Good luck, everybody. Have a good night.